Hi everyone, so today we're going to be looking at how to approach the question 1 of the FAR exam paper, and this is the question where you have to prepare a statement of profit and loss and statement of financial position for a given year. Okay, so you're normally given a trial balance, but the annoying thing is they don't arrange the trial balance in terms of how it will appear on the balance sheet and P&L. They arrange it in alphabetical order, okay, which doesn't really reflect real life, and they don't show the debits or the credits often. So yeah. What you'll also have are issues, and those issues are going to lead to adjustments to your TB, and that reflects the real world, where your initial TB is not going to be correct often, and you have to put through adjustments to make sure that is correct, like adjustments for accruals, or adjustments for the final income tax charge, adjustments for depreciation, just to name a few, or adjustments for IFRS 16, lease liabilities and right of use assets. Okay, I'm just trying to name some so that you can become familiar with the ones that might come up. Okay, so we're going to have to, sometimes it's worth reading, always read the requirements first of all, to familiarize yourself with which ones are associated with the most marks, which will be the soft P and the SOPL, and which ones are associated with the least number of marks, okay? And it's going to get your brain thinking of what sort of points you're going to write down. Next thing I would do, or next thing I personally do, is to read, maybe have a quick look through the TB. What it's worth looking through the TB actually, because you pick out the balances that are opening balances, okay? What I mean by that is, for example, we have the opening inventory here, if our year end is 31st December 22, but we don't have the closing inventory, so that's probably going to be an adjustment, right? We're also told, this is all PPE basically. Yeah, this is all PPE, and I'm just going to put here land was 300,000. Okay. So what I was trying to point out was that all of these balances here are opening balances, so there's probably going to be some depreciation. We're going to have to probably account for depreciation, and PPE always takes a bit of time, and that often you have to incorporate points from lots of different issues. Okay, so it's not entirely straightforward. What else was going to point out? Retained earnings is always an opening balance figure, because this retained earnings figure doesn't include the profit for the year, right? So just be careful with that. That's all I wanted to say about the TB. What I would personally start doing is preparing my pro forma immediately. So statement of profit or loss for year ended 31st of December 22. So what I'm going to have first, I'm going to have revenue, cost of sales, GP, admin expenses, PFO, FC, which is my finance costs, PBT, tax, PAT. Okay, so I've done that immediately now. I'm going to leave some space. I'm going to put soft statement of financial position as at 31st December 2022. Okay, so learn these pro formas actually, otherwise you might struggle. So NCA, I'm going to have PPE. Now I'm probably going to leave some space because I don't see any other non-current assets. So I'm going to leave some space, but there might be some that spring up. CA is going to be inventory, trade receivables, cash, just to name a few. Leave some space because there might be some that come up. Then I'm going to have current liabilities, so trade payables. I'm going to have income tax payable, potentially. Leave some space again. Then I'm going to have non-current liabilities, and are there any in the TB? Yes, there is. There's a loan of this much. Okay, so I'm just going to put the loan here. So do you see I'm leaving a lot of space, and the reason why I'm leaving a lot of space is because there might be some adjustments at the last minute. Next I have equity, so I'm going to have share capital, share premium, retained earnings. Okay. Now what might be worth doing is putting in some of the, I'd personally put in cash immediately. Okay. The reason why I think that is because cash never really changes, so I'm just going to put cash of 500,000. Okay, fine. Now, there are some adjustments that are really easy to do. So what you're going to have is you're going to have adjustments to deal with, and some of them are really easy to do and some of them are not. So I'm going to mark the ones that I think are easy to do. So let's have a look. So actually no, before we do that, let me tell you what to do with some of these balances here. Okay, so we've set up our SOFP and SOPL statement. What we can actually now set up, I'm just going to rub that out just to show you again. What we can actually set up now is our cost of sales and admin expenses working, okay? That always requires a lot of work to do. So cost of sales at minimum is going to have opening inventory less closing inventory, right? So why don't we deal with that immediately? So our opening inventory is 1.3 million. Okay, so I'm going to put opening inventory of 1.3 million. Fine. Why don't we let's cross out some stuff. Let me just darken that so that I know that I've used it. Okay, fine. Now, another purchases and admin expenses we can put through immediately. So purchases is going to go here. And purchases goes here. So what was the purchases? 2.4 million, so 2,400,000. Okay, so that I put that there. For the purposes of this, I'm just showing the ones that I've used. Okay, you probably can't do this in the exam. Next we have admin expenses, which is 2.3 million. So admin expenses is 2.3 million. Okay. Oh wait, I put 2.3 million here, and then that's us done. Okay. There might be some further adjustments to do, but we've got some marks at least through populating these. Okay. Now, a potential other easy adjustment to do may be putting the loan value. So I would do. We know the loan is non-current because it has 31st of December. I'll put 2024. So I'm going to put the loan in here immediately. Okay, I might have to put it on. I might have to make adjustments for it, but I'm just taking a educated guess. So I'm just going to black that one out. Now, what I tend to do is I don't like pasting all the values in. I like to look through the adjustments and see which ones are easy to deal with. Okay, so let's look through the adjustments that are easy to deal with. Well, we have inventories at 1st of December 22. We know that our final inventory figure, so that seems easy. I'm just going to put inventory 1,800,000 here. But where does the other side go? Well, it's going to go to cost of sales, so inventory minus 1,800,000. Okay. So I've dealt with that, and I've dealt with that. So I'm just going to cross that out. Okay, are there any others that are easy to do? Okay, well there's income tax liability for the year ended 31st. Income tax liability for the year ended 37,000. Okay, so I just put my income tax here. The income tax is always a post TB adjustment. Okay, so income tax payable is going to be here. So I'm putting it to both sides, right? Fine, good. And then we say dividends, it then says dividends of 300k have been debited to admin expenses. Okay, where should they been debited to? They should have been debited to retained earnings. So remember, dividends are not an expense. They're never an expense. And I've seen people even in audit think they are expenses, okay? So dividends, and we have to revert, if we debited admin expenses, we have to credit admin expenses. So we reduce admin expenses by 300,000. Okay, fine. Where does the other side of that entry go? Well, it goes to retained earnings, okay? So I'm just going to put minus 300k here. And why not put my opening balance in? So it's 6885k. I'm just going to add 6885k. Okay, and I'm going to eventually put in my profit for the year figure. So I'm just going to put PFY just to help me remember that I need to do that. Okay, so I'm just going to highlight that. And we've dealt with this one now. Okay. Now next we need to put in, next I'd have a look through the remaining adjustments, okay? So this one seems to be to do with PPE and depreciation, okay? And this one seems to be to do with interest charge on a loan, okay? So reading through these, I know that many of these balances are not impacted, so I'm going to put them in immediately. Okay, so I know revenue isn't impacted, so I'm going to put that into my TB. So I'm going to put 400,000, okay. And that's my PPE, we know is going to be impacted, but trade receivables we know isn't. So I'm just going to highlight this black, just to show you that I'm using it. Trade receivables, 400k. Trade payables, 200k. Trade receivables I'm going to put here. Fine. Normally what can happen with trade receivables is that there's sometimes a bad debt to do with trade receivables, and there's normally one or two adjustments. Trade payables rarely changes actually. That's a very easy one. So minus 200,000. Oh wait, 200,000. Okay. So I'm just gonna deal with that. We've put in cash already, so I'm just gonna cross that out. Next we have a share capital and share premium. So we know those aren't impacted by any of the adjustments, so we can put those in immediately. So I'm going to put share capital of 144,000 and share premium of 722,1,000. Okay. So we've already populated a lot of our trial balance, a lot of our statements by just identifying the ones that aren't adjusted for. Okay, so we're then told the loan accumulates interest at 5% per annum. Okay. The interest has not been accounted for and is unpaid at the year end. What do we do? Well, we have to work out the interest charge. So the interest charge is going to be the 5% multiplied by the 400k. Okay, and what's 5% times 400k? 20,000. Okay, so I'm assuming the 400k issued years ago. Okay, I know you'd probably be given more information in the exam question, but I'm more focusing on the exam technique. Okay, so we've got an interest charge, so that means that we have finance cost. Okay, and we put the 20,000 here. Right, even if this figure hasn't incorporated everything, I'm going to get a mark or so by just putting it in. So 20,000 here, and then we need to create another line called loan interest payable, which is going to be a current liability, and that has to be equal to 20,000. Okay, so that's just done. I'm just going to put that there. So I'm showing the ones I've dealt with now. I wouldn't do this in the exam, but I'm just trying to show you that I've dealt with all the figures. We can also black these out as well. So now what we're left with is the land, buildings, plant and equipment, etc. Okay. Now PPE, we need to make a working. We're going to have land and buildings, P&E. Okay. What you have is initial cost at 1st of Jan 22. You're then going to have your accumulated depreciation at 1st of Jan 22. You're then going to have your carrying amount at 1st of Jan 22. And then we haven't been told of any other adjustments. We haven't been told of any additions or disposals, so we're going to have depreciation. Okay, and then final carrying amount. Now what I would start doing is starting putting the values in immediately. So I'm just going to put a total column here. So what's up? Let's populate this table. So land and buildings, cost was 500 million. 5 million, I mean, not 500 million, so and our land had a value of 300,000. Okay, so our land I'm going to put here. Okay, next we're told that the total depreciation was 300k, so I'm going to put the 300k here. Right, so we dealt with this bit. Now we're told plant and equipment had a cost of 1 million, and that the accumulated depreciation was 250,000. Okay, so I'm just going to put the 1 million. Let me just check if I put it to the right number of figures. Yep, I have. Okay. Now, let me just get rid of these. There we go. Now, what you need to do next is to work out what the buildings is. So the reason why I put the land separately is that we always know land is not depreciated because it has an indefinite useful life. Okay, so what we need to do for the buildings is make balancing figures. Okay, so what you can do is you can do the 5 million minus the 300,000, and that gives you 4,700. Okay, and then you do the opposite here. Right, so now we can calculate our total balances now. So we can do sum of these. Always be careful with the sign, by the way. That's where I sometimes make my mistakes, is I do the sign incorrectly. Okay, 4,700 and then sum 750,000. Okay, fine. So we've dealt with that now. Now we have to work out our depreciation. And how are we going to work out our depreciation? Well, we have to understand where we're going to charge the depreciation to and what the criteria for it are. So we told buildings and the remaining useful life have a remaining useful life of 50 years as at 1st of Jan 22, and PE has to be depreciated on a reduced and balancing basis at 40% per annum. Depreciation has not yet been accounted for, or depreciation should be charged to cost of sales. Okay, so I'm just going to put buildings as 50 years and 40% RB. Okay, so that way I know that what my criteria are going to be. Okay, now our depreciation charge, where's that going to go? As we said, that's going to go hit our cost of sales. Okay, so depreciation here is going to be 4,700 divided by 50. That gives me 94k. Okay, and then here it's going to equal to 750,000 times by minus 0.4, because that gives us 300,000. Right, so our total depreciation is going to be here 394,000. Let me just make that a bit neater. Okay, so I'm just going to maybe make a note that building depreciation is equal to 4,700,000 divided by 50 years, and P&E depreciation is equal to 40% multiplied by 750,000. Okay. Right. So I'm just being clear about exactly what figures I'm taking. So I'm showing the examiner that I know what I'm doing. So next we have to calculate our final carrying amount. So we're going to do sum. This is just going to equal to that figure, and this is going to equal to these two added together. Oh, that doesn't help. There we go. And then we've got a final sum here. Okay, and this sum okay, so our final sum is going to be equal to this. Okay, so we've got our final PPE now. So we're going to put our PPE into here. So our PPE is going to feed into here. Sorry, very hot. So that gives us that. But then what we need to do is we need to now put in our depreciation charge. Okay, so our depreciation goes into here. So I'm just going to put equals to 394,000. Okay. Just be careful, make sure the signs are always correct. And then we put our sums. So cost of sales I'm going to put equals to minus 2294,000. GP I'm going to finalize, I'm going to say is equal to that. And admin expenses I'm going to put minus sum. Oh wait, no, minus sum, yeah. And this is equal to this. And this is equal to these two together. So you can also add in lines as well, just to make it a bit neater, if you have time. Put those in. So, oh, it's made a big loss. It's a bit of a whopper, isn't it? So instead of loss before tax, loss from operations, we can put loss before tax, loss after tax. Okay. So this is a funny one. We've actually got a loss this time. That's hilarious. I've never seen that happen, but I've created this exam question from scratch, so you can understand that. So I'm going to put minus. If we've got a loss this time, company CEO is not going to be happy. Nobody's happy with a loss. So I'm going to put so we've dealt with that now. We have to put in our PFY now, profit for the year. So our loss for the year, we're going to put minus this time, 351k. So our 300k minus 300 plus 6885 minus 351. Okay, because we have such a big retained earnings figure, we're not getting a loss. So just be careful. God blimey. Okay, so that's the statement prepared. Now what would be good to do is to check it all balances. So I would do assets, total assets column. So that gives you sum, and then you just sum these. That gives me 7,756,000. I hope I get this right. It'd be weird if I don't, because I've created the exam question from scratch. So total liabilities and equity. I'm just going to put that there. And then we're going to put sum. Yeah, you got it to balance. I just want to thank my family for helping me get this through. But okay, cool. So it does balance. So I think in some exam questions they said that people have said, some exam questions, the mark scheme has said, well, the examiners have said that people forget to do this. Okay, so if you're running out of time, just quickly put this in and you might get half a mark. But the most marks are from dealing with the actual adjustments, okay? But, even though this is a long question, you have a lot of time to do it in. So you don't have to waste time with the formatting. As long as you know the pro formas, you can get them out very quickly. And then, the adjustments, once you've done a lot of exam questions, you'll get really good at dealing with those. Okay, so hopefully that was useful, everybody, and I look forward to hearing any comments about this video. Thanks, cheers, bye.